Hello folks, it's been a little while since I've done a video. I figure it's about time to pick it back up. So what are we looking at here? This is EURUSD 1 minute data from about a week ago, a little over, just before the new year. So the euro had, of course, euro yen, euro USD had been in such a big upswing, and then it's gone into a corrective phase. Okay, so prices have been averaging lower. So what do we see in this particular chart? Well, during the European session, the move was obviously down. Now, here you see examples of M patterns during this down move which failed. Now, why do they fail? Because pattern is probabilistic. It is not certainty. It is not infallible. Everything about having a trading edge deals with probabilities of success. It deals with outcomes over a very large number of examples, so you can see what edge is present or not, if there is one, to using a certain set of tools or certain variables that you find indicative. So one I have here, this green vertical line, basically what it is telling me is that at it was actually 6:30, using 15-minute data on a currency strength meter, that the euro was apt to go back up. The relative position of the lines in the currency strength meter that I use had the dollar is very overbought, the euro is very oversold, and they began reversing with a pretty good velocity. So that is my first indication of a change in trend. I use relative strength in that way. So before that point, yes, there was a downtrend. Yes, there were M patterns. Would I have been taking those M patterns? No, I would not, because there's no buy signal. There's no buy context. The currency strength meter is what I use. This one in particular that's very good. I wouldn't want to trade without it. Is one of the main technical tools that I use. One of the others is just simple high-low logic. You know, we're making higher highs, higher lows, or the other way around. And this was clearly the other way around earlier in the day. If I didn't have such a clear signal from relative strength with you know, the euro and the USD lines being both very extreme in their reading and turning down with sharp velocity, I may not have paid attention to this quite as much. But all that can be programmed and tested regarding the relative strength lines and however you calculate that. What I'm showing here is the beginning of a new trend. Now, on this day, there was a pretty stout reversal in the euro. So we're going to do some playback data. And you can see that prices have been more or less averaging up. Oh, and we have an M pattern plot. Now, what's going on here with this bottoming pattern? Well, you could look at this point over here as a left shoulder, this area as a head, and then this area as a right shoulder. If this M pattern does coincide with a low, which we would expect because we believe we're in a rising market. Why? Because we have the indication from the currency strength meter giving us a context of bullish this pair. And so we're looking to buy low into what we believe will be an upswing. So it starts taking off. As soon as it makes new highs, we could say, there it is, that our right shoulder is in place. And so we kind of have a head and shoulders bottom here as well. And so that gave us the opportunity. The M pattern is golden once you use it in the right context. You have to have a good filter for what prices are doing. If they're going down, use a W. Don't use an M. You're going to be going short to make money. So how do you set a target? Well, targets are often fibs. I mean, you can use Fibonacci external retracements from point A to point D of the pattern. The 2618 is very often hit if you're in a trend. Now, depending on how the euro and the USD currency strength lines had looked at 6:30 in the morning, I may not have been expecting a trend. When they move together, like both up or both down, that coincides more with a ranging market. But when they're at extremes and they turn sharply towards each other, that indicates a trend. So we have a trend. We have this initial correction to the trend in the form of this pattern, and we have a trend target of 262. And that right there is a setup that is very valuable, folks. I mean, that is information that I'm sure somebody somewhere paid a lot of money just to know that. So basically, we have the ability to identify a low as long as prices are going up, and we'll never know that for sure. We don't have certainty, we have probability. So you have to test this out over many examples. But after you get to several hundred examples, and you preferably using a computer, because the human eye and human psyche will tend to look for instances where it worked. We need to take all the different instances where it didn't work into account, and that'll give us our true performance metrics. So that's why these patterns are available for testing. I mean, we can provide call functions for them, integrate them into your custom applications, and check it out, because the reward to risk on this trade was very good. It was more than 4 to 1, and these are very common.